Tax cuts are playing part of a role. Some of it is we're still in the sweet spot of rising wages. They're rising modestly and at a rate that doesn't really disrupt the expansion. Think of that as empowering the consumer. And then partially because of continued high business confidence, we saw a pickup in CapEx. We think that's getting another lift from the tax bill.
Does that necessarily mean gains in the stock market?
It doesn't. It's really what's baked in. Our feeling is that we've kept somewhat of a steady path in here. At the beginning of the year, we were very cautious. We thought there was too much optimism. Now we think there's too much pessimism. One area, and this is to Joe's point earlier, about how fast we can grow, I think the markets underestimate the potential for productivity gains.
So we're still looking at those two things, those two bugaboos that people talk about, the population growth and productivity growth. I guess you can reduce it to that, but I don't know. You never know how things are going to. Terranova was saying that earlier. Technology, you never know exactly what changes on the edges of those two. Things that everyone invented.
Michael, in your view, what can, if anything, offset those two things? Because if we are to believe that demographics and productivity, lack of productivity growth are, what is there and what is structural about the economy right now, then we're doomed.
Right. Well, first of all, those two things, population growth and productivity growth, that's just arithmetic in terms of what long-term GDP growth is going to be. On the population side, it's going to be hard to see the types of gains in the workforce that we've seen over the past several years because the labor market's at full employment, likely. The unemployment rate's already very low. So we're kind of stuck with the sort of labor force growth that's dictated by demographics. So to get really strong GDP growth, we're going to need to see productivity growth accelerate, which is where technology comes in, which is why forecasting productivity growth is very difficult. But what we do know is that the past couple of years, including the last year, we've seen the trends that have been quite a bit lower than they were in the late 90s, early 2000s. Maybe that can change. So far, I think what would make us more confident that that would change is if that capital spending pickup we've seen.
Do you remember the so-called baby bust in the 80s that followed? There was the boomers, and then there was the baby bust in the 80s. And it was, everybody talked about it. That was the consensus. So how did we grow in the 80s?
The 80s weren't a great time for productivity growth. Productivity really
How did we grow it? We grew it better than 3%.
Yeah, you still had good labor force growth because an increase in female labor force participation.
Okay, so that helped. So there's always a one-off that people come up with. There can be another one-off this time around.
Well, there is room. Had a one-off. I mean, the last 10 years have been quite disappointing. So
but a lot of it, you don't think any of that was self-inflicted. You don't think regulation. You don't think Obamacare. You don't think anti-private sector tax redistribution. Yeah, it was all self-inflicted. Yeah. And we still grew at 2%.
That's only a partial list, I think.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.